Greetings all, Ben here from East West. I thought I'd just have a look at TLT and the rate market today, because obviously that's holding a lot of sway at the moment, and it's something we've got to keep an eye on. So just starting here on a weekly with TLT. First thing I'd probably do, usually I'd start on a big view like this on a weekly, and I'd just bring in an Ichimoku cloud overlay. Now obviously we've had a very good plummet in TLT. With these clouds, especially on a weekly, I just can't really think that that this is over. The sell-off's over until we can get on the other side of the weekly cloud. I mean, we had a little try here, but we failed pretty quickly. But until price can really get above this cloud and start to maintain, at that point I would think that the bottom's in on a longer-term basis, and that it might be safe to buy. But I'm not seeing it just yet. And so that just leaves us with the bare basics of what we can see, which just is a big fat downtrend. And you can see here 3 very precise touches on the weekly just really solidifies this as something being quite significant, obviously. And until we can sort of break that trend, which obviously we are a long way away from doing just yet, it's just hard to be bearish just yet. It can't see anything to turn it around as things sit. Now, in terms of Elliott, just when we start to put a bit of a structure in here, look, you can kind of see how, 1, 2, 3, 4, and then we're coming down for 5. But this starting point here makes it a little bit tricky. But if I was forced to put a count on this, I'd do it like this. Now, I don't have a much faith in the validity of this count. Let's just say that, because this is a problem. This too looks a bit funny. That doesn't look super impulsive because of all this, but just on the general bigger picture, that's kind of how I'd put it together, because this looks quite wave 4-ish, and I don't know if this is impulsive, but I think the thing is this whole move down, like I said, I'm not massive on this count, which is why I'm not really leaning into it, other than to say that, look, we've now broken the low. So if this count or something like this did prove to be right, then you would think that we're coming down for a wave 5 for a termination point, but we're not there yet. Now, I wouldn't even bother trying to measure it out or pick a zone or anything like that, because I just think that there's not enough validity in whatever's sort of happened through some of these sections, certainly here, to really make me think that, yeah, this is a good Elliott wave pattern. One thing we can kind of lean into, and take note here, I'm out on a weekly again, is that as this makes a new low below this low, we are getting some divergence on the weekly, but it remains to be seen if the RSI if the price doesn't have enough momentum to come down and break this line, and whether or not we actually do diverge. But like I said, because we're on a weekly, to me it just feels more about the timing, and that's why I use these clouds to sort of help me sort of think about it, because like I said, until price can get up onto the other side of this cloud and maintain, maybe test the cloud and go up, then until that point it's hard for me to make any sort of bull case for this just yet. You've almost got to wait for the bottom to come in, prove itself, and for it to launch, and that could be into next year. It could be longer, but the point being is that I just don't think that even if today proved to be the absolute bottom and yield started to fall away from here, I still think there's quite a few months to go before we can get to the other side of that cloud on a weekly basis. So that brings me to a chart of the actual 10-year yield on a weekly basis, which we can see now is just moving ever higher in this trending movement that we've got after we tested that weekly cloud. We've rejected it, and now we're just accelerating on. So I think the thing about the 10-year yield chart is that there's a bit more of a defined Elliott pattern involved here. Now, even though you can make some arguments about this being an impulse, or if the 2 finishes here, or if we've just got a running flat here for a 2, this move looks pretty impulsive, even though you've got this wobble in the middle, and this looks like a pretty good sideways chop after a long run. So that would just lead me to naturally think that we've got 1, 2, 3, 4, and then we're going up to get a fifth wave, which, to me is going to put the yields. I'm kind of expecting them to get to 5% unless, the Fed do something to change course. And, the range of options to them there are, well, there's a fair bit. But I think the problem for me is that, the amount of issuance that the Fed are doing and the amount of debt, new debt that the market's been asked to absorb, like it's struggling to do it. We're now up to the point where we're issuing $1 trillion in new debt a quarter. And as the market starts to struggle to absorb that debt, that's just one factor that's just going to keep putting upward pressure on yields. So it would be the same sort of thing here. Just on this weekly basis, I'd be looking for the sort of candle structures to come in that might warn us that we've got a top. I guess you could say we're kind of diverging, but the way the market's traveling, it's not hard to see that the RSI is going to have enough velocity to get right up into this point again. So we may not get divergence, and that might mean that this is not, as per Elliott, an impulse. And I would say that's correct, because Elliott wave within bonds, I don't think, as with commodities and stocks, isn't as good as it is. With bonds and commodities and forex isn't as good as it is with stock indexes, because you can't expect yields to expand forever. So yeah, I think it just looks like it goes together like a nice sort of 5-wave movement coming in. But the point being that I can't see any sign of the top being in just yet. But that leads us into the shorter part of the curve, and this is just the 2-year yield. And you can see here, the RSI is telling you that the market is starting to struggle to advance much further. And you can just see it in the candles, like the ranges are just contracting. It's just probably getting dragged more by the long end. It just doesn't look like it's ready to explode. I wouldn't try to put an Elliott count on this. I don't think it's clean enough to lend itself to that. But I don't see any warning candles just yet. But you can just see generally that the market is just struggling above 5%. Like it just feels like it's trying to make a top up here. So what does that mean? Well, that means that I think, I could be wrong, of course, I think that the flattening of the 2s10s curve is finished, and that we've broken out of this sort of longer term downtrend, and now we're just starting to put up this much smaller uptrend that is starting to hold sway. So what does that mean for rates in general? Well, I've just taken this chart out to a monthly, and this chart at the bottom is just the US cash rate. So what you can see with the curve is that basically once the curve's been flattening, okay, and once it starts to steepen, as it has here, the steepening after a prolonged period of flattening is usually a good sign, or it has been in history, that the short term or the Fed funds rate's about to be cut. So we saw it here. You can see it's not as pronounced here, but you can see the curve is starting to steepen after a big sell-off. And not long after that, the curve bottomed in January 2007 and the rate didn't get cut till August. So there is a lag, but same thing here. We've got a big sell-off. Market went flat. It's not as pronounced here either. We just started trickling off, but you can see as the curve steepens, the rate gets cut. Now look what's happened here. We've got a big sell-off. Rates have gone hard, but as we sort of saw, we're just starting to try to climb out of this sell-off. Okay, so that to me would suggest that the front end of the curve, the curve itself is probably getting close to being ready to steepen as rates up the front get cut. But that doesn't necessarily mean that the long bond rates are going to fall. They'll fall somewhat, but obviously the rates up the front will fall much quicker and harder. So the ramifications for stocks is, when we look at the S&P, you can put bull counts on this, but the problem I've got with this, even though I've got a count that's bullish, there's a couple of problems Elliott wave sense. One is if this is an impulse, then you'd probably have to say that this is your wave 3. Now the problem with that is that I would expect wave 3s to break you'd probably have to do it like this. You'd have to say 1, an ABC for a 2, and then off for a 3. But the problem is that the market never broke the base channel, which is a big warning sign that this actually isn't an impulse. And the other problem we've got is that you have to make, you pretty much got to make this the one wave if you can, and this is an impulse. Now, to do that, you have to count this as a leading contracting diagonal, which is, I wouldn't have said that that's what you usually see in wave 1. You'd see that in wave 5, where the wave's getting smaller and smaller as we approach the top. But to start off like that is highly rare. It just makes me think that this is most likely not an impulse, even though I've labelled it that way. And what we sort of had at this point is what looked like a nice one-to-one move, but the market's just sort of failing below this overall trend channel. Now, this was the line where we recaptured the bull market, which is 20% off the lows. So we are still technically in a bull market. The bear market line's not down to here, so there's a long way to go. But this, at this point, if this starts extending much further, then you start to look at this and you think, well, this doesn't look super corrective. This is now starting to look like an impulse. Now, a bit would have to happen for this to be proven, but you know, you could say 1, an ABC for a 2, and then we've got a 1, 2, 3. What I'm getting at is that this starts falling through this channel and starts accelerating along. I think at this point, you pretty much got to say, well, if this is an impulse down, so something completed here, and what completed? Well, we never broke the trend channel. We don't have a clean impulse here, so do we actually have some sort of more a 3-wave swing here, which is a correction? And that sort of leads itself to the bigger picture overall is, well, does that mean we've got a 1, a 2 wave, and we're going to get a 3 wave down, which would complete the correction of the COVID rally? So that, I mean, that's, I'm not making any predictions about that. This is just what I'm seeing. And we know that the S&P is being held up much by tech. So I'll just leave this because I don't really have much of a clue about what's going on here, but just this little bit is starting to grab my attention, that this is not an impulse. Whatever this rally up is not an impulse. But things need to develop much more quickly than what we've seen thus far. This is a pretty good sell-off, but it needs to keep accelerating, probably back through all this sort of structure to make you think, well, this is now an impulse, so I've got to sort of work out what's going on here. So just flipping over to the Dow Jones Transport, because this is, you know, the good canary in the coal mine. And I think we had, you could argue maybe that's 1, 2, 3, 4, 5, but that does look like a 5-wave movement that we had up. It trended nicely and it had this massive spike at the top. So, you know, and you can see what it's done since then. It's just dribbling, but because we've got this lower high here that just sort of held all this area, and now we're slipping off. Now this black line is the 200-day moving average, so we are in, even though we've spent a bit of time below it previously, but we are in danger of just slipping below that again. And so that would lead me to think that, you know, we're probably more likely to come down, test this, and get into the lower half of the trend channel. So whether or not we're going to come down, and that once again will lead to the thought, is this 3 waves going in that's going to correct this rally? But it just doesn't look overly strong, does it? And then just to finish off here, just looking at the Russell, man, it looks even more soft. I think we had the cloud, we got below the cloud, we had a little attempt to get above it, but now it looks like we're going to get another week where we're going to close below it. So that's not a great sign. And just in terms of the patterns and how they're playing out, I mean, even though it's probably not super, maybe it's 1, 2, 3, a flat 4 up for a 5, something like that. But that's not it's not a super duper looking impulse. But I think what we can see is that we do have a contracting pattern going in here. This low is actually lower than this low, so that, you know, you could call it an overthrow of the trend line. But this high is lower than this high. But we're contracting in here. So what it kind of just looks like is that we've got, once again, a 1, some sort of flat, or an A, some sort of flat B, and that we're going to go down and get a C. That's just what it looks like at this particular point in time. Things can change. Of course, things can change. But this doesn't look finished. Like, you wouldn't expect an advance to start from this sort of pattern. You would expect an advance to start after this comes down, and then 1, 2, and then start to do that. That doesn't look like the start to an advance. That looks like the midpoint of a correction to me. So it just looks and feels like the rates, that the stocks aren't going to turn until the rate cuts start, and the rate cuts don't look like they're going to start just yet, even though the curve is starting to put out some warning signs that the rate cuts are getting closer. So I just do worry that there's one more leg down in the general stock market. Whether or not we come down and puncture the low, I think it's not hard to see the Russell taking out the lows, but just to my mind, I think that the S&P could come down and take out these lows at 3,500. I think that's a stretch for me. I can't see it happening, but that's not to say it won't. There's a lot of people who are calling it way lower, so I don't know if that's going to be true. All I can do is just look at what I see right now, and what I see is something that's got great potential to develop into an impulse, which I think will have to force a lot of people to change their minds about what this is, because I don't think at this point the odds of this being an impulse are up. So I think they're narrowing, let's just say that. So look, I'll just leave it there. I'll probably take a look at uranium later on the week to see how the week pans out. But that's just a general look at how I'm seeing it at the moment. So let's just see what the curve does, what the Fed do, how the long bonds are tracking. But right now they're soft as butter. So take care. Thanks for watching. Don't forget to subscribe and like, and I'll see you next time. Bye.